take advantage of when those real viral moments begin and how long they last, because they don't last so often. What is more committed than that true fan? And it's somebody that has that vested interest in your business, somebody that is invested in your business. So I really wanted to build that investor community that would help share and engage with the videos as well. This is what I got to do this week. I got to do it every week. Doesn't matter if that last video I did, I was so super disappointed. I mean, you put so much effort, so much time into a video. You think, oh, this is the good one, right? And then 10 of the last 10, it flops completely. It doesn't matter. You just gotta keep on that schedule. You got to pump out those videos, and you just gotta stick with it. And I think that helps. That the people that can do that, that can put it into perspective and say, hey, no, just work, put the work in, are the people that eventually will be successful. Whether you are now, whether you are next year, or even the next year, you will be successful.
This is Joseph Hogue. He makes $280,000 per year by sharing financial strategies that empower everyday investors to take control of their money. From his days as a Marine to working in venture capital, Joseph has always focused on smart investments. And in 2017, he turned his expertise into a thriving YouTube channel, building a community of over 650,000 subscribers and pioneering unique approaches to monetization. In this episode, we dive into his actionable strategies of turning viral moments into lasting income, how his Gigastar drop created a new level of community investment and trust, the role of affiliate marketing in generating evergreen revenue streams for him, and the discipline and consistency that keeps his YouTube business thriving. Joseph doesn't just analyze stocks. He has mastered the business of YouTube. His innovative strategies can help you create sustainable income and unlock your channel's full earning potential. Brought to you by Gigastar. Inspired by YouTubers like you with the vision to fuel human creativity, Gigastar brings creators and investors together. Welcome to the Funded YouTuber podcast, Joseph. We're so excited to have you because you're one of our elite drop people on our team. I'm so excited to have you.
Thanks, Desiree. Good to be here.
Awesome. Well, before we get started, tell us, what do you create on YouTube?
Well, I do financial content almost exclusively about investing in the stock market. So which stocks to buy, which ones to avoid sometimes, and really try to understand how to invest and how to make money, how to make your money work for you.
So how did this YouTube journey get started? Like, what was your experience and why did you bring it over to YouTube?
Well, I come from an equity analyst background. I worked more than 10 years as a equity analyst and then as a venture capital analyst. So I come from the traditional industry sense of the industry, that analysis of stocks and investments. I did that. I knew in 2012, 2013 that I really wanted to own my own business, to really own my own assets instead of always working for someone else. As well as the hours in that line of work are pretty intense sometimes. I mean, you're talking 90, 100, 120 hours a week a lot of times. So in 2012, 2013, I started shifting into freelance equity analysis and that kind of thing, just to really pay the bills while I got my own business, my own online assets started. So I first started in blogs. Again, this was 2012, 2013. So YouTube wasn't quite the hit that it is today. So I started the blogs and really self-publishing. Self-publishing was the thing that got me the immediate income to really pay the bills, right? While I grew some of these other ones, as well as the freelance equity analysis. I worked the blogs for 4 years until 2017. Did really well. I loved blogging. It was the right thing at the right time. But then I noticed in 2017 that one of my blog posts had a lot of traffic to it, just a ton of traffic, more than usual. And, going through the analytics, I saw it was from one particular YouTube video that had highlighted it, from a YouTuber that had highlighted that post. So I started looking at it and it's like, wow, okay, maybe YouTube is an actual thing, right? And in 2017. So I was a little late to the game at that point. But then that's when I really started making videos for YouTube exclusively. I had the YouTube channel for about 2 years before that, but was really only making summaries of each blog post to embed in the post, give it a little bit more time on page and things like that. So I wasn't really using YouTube as a business, as a source in itself of revenue. But there in 2017, December, in fact, Christmas, really, I actually made that plan to really start with YouTube, start making that a business in itself. And over the last, well, geez, 7 years now, I've really transitioned almost exclusively into YouTube. I do very little. I don't post to the blog anymore. I do very little other platforms other than YouTube.
I find this interesting. First of all, I don't know whether to be insulted or excited that another 2017 YouTube starter was there, but I don't think we were late to the game yet. I feel like the content creator, the like creator economy, like that didn't exist yet. We can still like
Sure.
love the idea of being a YouTuber to aid in our business and like build out those multiple streams of business.
Sure. I was fortunate to actually have been early, especially to the investing side of YouTube. I look at others, of course, Mr. Beast, some of the other ones that have been there for 10 and even 15 years, and have really built up that community. But no, 2017 was fairly early when you consider how many more have joined here, especially post pandemic.
Yeah, the pandemic really, I think, showed the world the relevance and necessity of having a digital brand and the utilization of video within that, and like how it plays such an important part in how we just kind of function culturally and societally. But back when we gotten started, it was a different way to make money. How were you making money when you got started on YouTube, and how was that a part of your plan going forward?
Well, and I've actually got my revenue history up all the way back from 2000 and 2012. So I can look there. And in 2017, so again, 2017, I had just started in December with YouTube. So that year I had averaged, $5,500 a month from the blogs. It was from, looks like it was about 2,000 a month from the books that I was still heavily into self-publishing, doing about $2,000 a month there, about 2,000 on sponsor or on affiliates, and another, four, 500, $600 in sponsored posts. So $5,500 a month isn't bad, especially we were living in Colombia at the time, which costs about a third of any place here in the United States. So we were doing pretty well. December switched over into YouTube. That first year, I grew it to $7,000 a month. So through 2018, through 2019, to 12,000 a month. So you do see that very quick progression up into average monthly income on that. The plan at first was just to grow the community on YouTube. As I said, that blogging income and that income already was more than covering the bills. So I wasn't really focused quite as much on where the income would go, but just I knew that from my blogging experience, you build the community, and then the income will come, whether it's through courses, whether it's through sponsorships, affiliates, anything like that. So really didn't have a whole lot of experience with how much YouTube paid. I did some research on that as far as what you can expect, but of course you never know what the views are going to be. So it's really hard to get a sense of where that income is going to be until you actually see it.
Community is such like a buzzword when you're talking about the creator economy, especially over the past year. Everyone has been like, you got to build a community in order to make money, because those are going to be the people that you can rely on for your sponsorships, for making money in the future, buying from you and all that. How was building a community different and then more valuable when you switched from building a community from blogging to YouTube?
And it's just something I never really tapped into very well in blogging, because obviously with a blog, you are very much faceless. You're very much not necessarily anonymous, but you really have to be able to come across your personality in your writing. And I've never done that particularly well. Equity analyst background, just the numbers, just the facts, that kind of thing. So when I switched to YouTube, obviously it was an opportunity to be able to show my personality, those core can't even remember what core branding concepts, core beliefs and ideologies, things like that really a community comes around. I was able to show those not just in what I was saying, but in my background, to the videos, to what I would wear, things like that. So it became, for myself anyway, much easier actually to build a community around core beliefs, a value system, and things like that with video. And obviously, you're face to face with people, so you make that little bit closer connection, I think.
I always say it's so much easier for you to connect with someone. You can see their face, you can get context for their expressions, how they're feeling, like the tone of voice, what they're doing with their hands, everything like that. Like, how many times have we even nowadays like lost context in a text message with like our family or our friends? Or we're like, why are you being mean? They're like, I'm not, I'm just talking to you. Like, you miss so much within that. And I think that that is one of my favorite parts truly about the YouTube communities that we can build, is that personality growth that we can get by being ourselves online. So I would love to know, as you've gone through this journey and you've done things, and I know you might not have dealt with this maybe directly, but I'd love to know, have you had or experienced any really bad financial things as being a YouTuber that you're like, well, that was a learning opportunity?
Not well, I mean, a couple of ideas, a couple of things. Obviously, again, the income was more than paying for our bills at the time, and now, of course, even after we've moved back to the U.S. So the money is there. One is, take advantage of when those real viral moments begin, and how long they last, because they don't last so often. During the pandemic, tragic moment, or tragic era for the world, but it was pretty good for YouTubers, actually. And it feels a little cheesy or ooky to say that, but a lot of YouTubers had some of their best years right there, 2020, 2021. And I think, understanding that in hindsight, of course, understanding that, then you would work a little bit harder, and you would put out a few more videos and really take advantage of that opportunity while it lasts. For example, there in I want to say 2021, I was up to just over 48,000 a month on average. Through that kind of post-pandemic investing surge in excitement and enthusiasm. And that fell to just under 30,000 the next year. So 38% lower. The year after that, another 47%. That was really kind of the bottom of the post-pandemic crash for investing YouTubers anyway. I mean, it's still about 16,000 a month. But yeah, you really do need to recognize when times are good, and when there's that momentum around, maybe not just your theme or your topic, so like investing channels, but your channel in particular as well. I mean, I've seen a lot of personal finance investing channels do really well, and then for some reason they kind of pass the baton to another group of channels, and they do really well. And it's hard not to get that hubris while you're up and say, man, I'm doing everything right. Who are these old timers that aren't getting the views anymore, and stuff like that. But then everybody experiences it. Everybody gets their time in the limelight, it seems, from YouTube for some reason. So you really have to recognize when that time is, take advantage of it when you can, and get it for all it's worth.
I couldn't agree with you more. I feel like there was like a crazy heyday. I know for me, my views spiked like crazy. The income was real nice. And now it's like, what's going on? Why is this so hard? And it's just, there's a lot of things. And we could probably go on a whole rant about like
Sure.
what YouTube is like in the post-pandemic world, for sure. But I think the thing that I find the most interesting about being a YouTuber is every year, how I make money predominantly changes, but there's also some things that kind of just always stay the same. What have you seen to be your flashes in the pans of income besides the AdSense that we just talked about? And also, but versus like the things that have been able to be steady, true income streams for you?
Well, I mean, so yeah, YouTube's always been, or since 2017, 2018, YouTube's ads have always been there. They're easy. They're managed by YouTube. You don't have to do anything really for them. So those are pretty reliable, although they do rise and fall from month to month. The courses for me have been something that I really haven't taken advantage of quite as much as I should. I just I've got 2 courses out, a spreadsheet that I sell. So not really to the extent of a lot of other channels have, but I just finished a course this year, another video course. Finished it in May, and the first 2 months were $29,000. And again, just this year, it's been 20% of the total income. So you got to take the time to. I know it's easy to get in your routine. Okay, how many videos do I got to do this week? How many posts do I got to do? Get in that routine and only do that. But you really do have to take time to experiment with some of these other income sources, like courses. Like I know, again, for myself, self-publishing back in 2012 was really, besides the freelancing income, was really the income that held me over while I built my online business.
I love what you said about experimenting with new income streams, especially because you have done, I think, what we consider the ultimate experiment at Gigastar is that you have done not one, but two drops with Gigastar where you are getting future investments of your AdSense from the community that you've built. Share with us why you decided to do a drop. What was like the value that you saw in it and how has it been for you?
Well, I obviously, again, come from that equity analyst background, venture capital, where you invest in early startup companies, so pre-IPO, non-stock companies. So it's always been kind of natural to think of, well, hey, I've got a business here that does very strong income, reliable sales and profits. Why not sell a portion of that to investors? So that's really where I came from. Probably about 3 or 4 years ago, started thinking of that idea, going to different platforms, talking to different securities lawyers, things like that, to try to see how I could work that out. Finally found Gigastar and did those two drops over the last 2 years again. And for me, it wasn't quite as much about getting that funding that I could apply back into the business. It was more about building that next level of community, right? In blogging, and it applies to YouTube. We talk about those 1,000 true fans, right? The 1,000 people that, if you can build that 1,000 true fan community, where the people that just follow every video, that buy every product, that really follow everything you do, then that's all you need for a business, right?
Yeah.
And I started thinking, what is more committed than that true fan? And it's somebody that has that vested interest in your business, somebody that is invested in your business. So I really wanted to build that investor community that would help share and engage with the videos as well.
What was it like working with Gigastar versus other opportunities that you said you researched or building it yourself? Like, why did you decide this was going to be the home for it?
Well, back when I originally started sourcing providers or platforms for it, then nobody had done anything like that before. This was probably about 3-4 years ago. The securities lawyers I talked to, they were all, okay, so let's put this under a regulation crowdfunding one or regulation A deal. There's some of them were open to doing different kinds of things. I found one that wanted to take it public, but it was the entire business. They wanted to basically do an IPO of the entire business, so all the products or all the income sources. Investors would own shares in the entire company, which of course would have meant, board of directors, would have meant audited financial statements, would have meant, a lot of accounting within that, and a lot of headaches. It would have been more funding, on that side. It would have been, he was suggesting 1.2, 1.3 million funding round. But again, at that point, I really just wanted to do something a little bit more basic, a little bit more simple, maybe sell a debt issue. So just a loan that I would pay back over maybe 5 years to investors just to try it out, or a revenue share agreement, and maybe even a limited time revenue share agreement just for maybe a 5-year revenue, just to kind of test how that investor community worked, and whether I wanted to commit to it long term, because it is a long term commitment. That is, once somebody invests, that's for life, or until some kind of a secondary market gets set up. So I didn't go with those. Found Gigastar, and it just seemed to click. It was lower fees. The guy that was going to do the Regulation A funding round he wanted, like, it was a securities firm, securities law firm. They wanted $75,000 in fees, pretty much off the top, and which would have been a fairly small percentage of that 1.2, 1.3 funding, but 1.2, 1.3 million funding. but it was off the top. It wasn't a percentage of what we raised. It was just flat, right? So I didn't know that I wanted to really commit to that either. I wanted more of a percentage of what I raised to be in as the fees. So yeah, Gigastar worked out really well. It was seamless, and over the successive rounds, they've gotten very good at understanding what needs to be done, the paperwork, all that. So it's pretty well worked out, all the kinks, all the hurdles, and everything, and it's very seamless from start to finish.
Share with us what your Superfan community is like now that you have this vested interest community versus your just people that are your fans and your normal YouTube community.
Well, it's sometimes it's kind of hard to separate the two because I do have a list. There's about 708 investors in the channel right now, and I know most of who they are by the different social profiles, whether it's on YouTube or our private Facebook group. But I don't know. I mean, every once in a while, there's one that's not invested, one that is, that kind of thing. But I can say that there's a few. I know one in particular pretty much runs the private Facebook group. I mean, he's there every day in the Facebook group, posting, talking stocks, that kind of thing. So very, very much engaged and invested in the channel. There's another couple that are also very active. So I'd say the investor community is more active, obviously, than the non-investor community, and there's a little bit of spurious correlation there. Just not to get statistics nerd on you, but obviously the people that maybe were already very much engaged, we're going to be investors anyway because they're engaged. They're very much vested in the channel as those true fans. So they were more likely to be investors anyway. So it's a little hard to say that whether being an investor caused them to be more engaged or more vested, or they were just that way to begin with, and that's why they became investors. But there is definitely a correlation, I guess you could say, between the people that I see constantly in the YouTube comments, in the Facebook group, on different platforms, and being an investor.
Have you been able to see any additional benefits to doing drops that have allowed like your channel to perform better? Have you gotten like other income opportunities that have come because you've done this or because of this Superfan community? What are some of the like accidental benefits that have happened from doing the drops?
I don't know that I could really say that there are any that I've noticed. I mean, obviously, in YouTube, it's always difficult on YouTube because you never know what's the algorithm, what's the pull of a certain topic, and why a video does well. It's just so much a black box that it's hard to attribute any one thing into it. I do know that. I mean, I can send out an email to the investor community, ask them to engage with a video or share a video, that kind of thing. And it will get higher engagement, higher sharing, especially during that crucial first hour, and things like that. But it's really hard to draw, a direct causation from what's really only a small portion, 708 people, even if they are sharing out with their own social media profiles, it's still a fairly small community when you're talking tens of thousands and even hundreds of thousands of views to a video. I'm sure for maybe a smaller channel that was still getting maybe 1,000, 5,000 views per video, then obviously if you were able to build a community, an investor community of 500, 1,000, something like that, it would be a much bigger change or a much bigger effect.
I just think it's always interesting to see the opportunities that can come and like how things can benefit or help you. So I'm really grateful for the honesty around the question. One of the things that we do very differently here on the podcast is that we break down your income streams by percentages. And one of the things I said to you off camera is like, I love when I get to talk to investment creators because they know their numbers. Like he's like, I'm gonna pull up my spreadsheet, and you even went over what we were talking today. So when we break down your income streams, you basically have 5 income streams. The first one is going to be from your AdSense with 32%. But then you also have sponsorship deals. Share with us what you look for in your sponsors and how they benefit your community that makes up 20% of your income.
Well, the sponsors that I do, it's all very much investment related. I know a lot of other channels will do VPN sponsorships and a lot of a lot of other non-related things. So I try to do very much related to the content that I'm talking about. And it not only it helps the sponsor because it's much more related to what I'm talking about and what people are interested in, but it also keeps me on topic, and it's also something that I feel like I can a little bit more value I can provide to viewers. Right, I'm not talking about some VPN that I may or may not use myself. Right, it's only the products and the platforms that I use. So I tried keeping it on topic within investing. Obviously, with a sponsor, I mean, I'm looking for somebody that makes it as easy and as seamless as possible. Right, with sponsorships, you do make more money with sponsorships than you do with affiliates, but there's that extra layer of work where I have to script out everything anyway, but I have to submit that script for review. I have to wait for them to approve it through their compliance, because of course this is all through platforms and investments and things like that. So they have a compliance department. They have to review it. Sometimes they have the marketing department review it. Then they have compliance review it. And so you do have this sometimes a little frustrating process of reviews, requests for changes, reviews again, requests for more changes, and things like that. And then even after you've already after you've had a script reviewed, approved, then you film it, and then now they want changes again. So it is frustrating at times that they can't get all the requests done before you film a video, and you have to do reshoots, things like that. So it is helpful to find a sponsor that knows the importance of just getting everything reviewed and approved before filming. You'll find a lot of sponsors will come from the assumption that or that they're working with a traditional ad firm, right, where they work very much closely with the ad firm, developing the deliverables, developing the ideas, the storyboard, everything like that. They work on it, they film it, they reshoot it. I mean, it's very much more detailed and in-depth process with a traditional media firm. Here with YouTubers or with influencers, it's not that. We need to be able to do stuff very quickly. So yeah, I look for any sponsor that's going to make it seamless and easy, a simple process as possible.
I find this so fascinating because I've had both kinds of sponsors where it's like, okay, just do the thing. Just talk about us. Like, we have like this vague thing, like, we trust you, do the stuff. But then you get the other ones like, no, I would like to review every part of this. And you're kind of like, at what point does the creativity step into place? And like, we get to just do the YouTuber part. But one of the things that you said I found was very interesting about how sponsorships can pay more than affiliates. When we look at your pie chart, 20% of your income comes from sponsorships, but 27% comes from affiliates. I think the learned lesson in this is like that affiliates have this really incredible capability of compounding, and you can extend out those sponsorship partnerships, because a sponsor might be paying for you to do a video or a series of videos, but they can keep paying you over and over again because those videos are evergreen. They keep working for you, and you can continue to keep mentioning them if you're looking to drive traffic or if it's a solution that works in the video. How does affiliate marketing play into your income stream, and what's your strategy around it?
Well, affiliates, of course, with anyone, sponsors as well, but more so with affiliates, you'll notice that a call to action on a product or a service, a platform, it gets saturated in your market very quickly, right? So it's always good to have a list of affiliates that are working, that the sponsors that might be interested, things like that, to fill out your inventory of content, right? And then to cycle through them, right? So I might hit one affiliate that has worked particularly well. I might do that for 2 or 3 weeks, right? Not every video, obviously, but maybe one video a week on that. And over 2 or 3 weeks, then obviously you're going to notice that your conversion rate and your click throughs to that affiliate will go down over those 3 weeks as your base or as your core audience gets saturated, right? So then you just kind of you switch it out for another one and wait for it to die, wait for that to renew itself, right? So with affiliates, I've got a list of Right now, it's probably only about 5 or 6 affiliates that are really working. They come and go. Obviously, affiliates drop their programs, they start their programs, things like that. I'll usually have anywhere up to maybe 10 affiliates that are working on the channel, and I'll cycle through them like that. But yeah, affiliates are something. I mean, you can drop in a quick, 45 seconds, 30, 45-second call to action in the video anytime you want. Doesn't need to be reviewed. You drop the call to action in the video, you drop the link in the description, and you're good to go. So I think the reason why I do 27% of my income from affiliates rather than only 20% from sponsored is just because there's much more affiliate calls to actions, right? And like you said, they do keep living continuously. So every video might not be the that viral hit that you want, but every once in a while you'll do really well on a video, and you just happen to have an affiliate call to action in it, and so yeah, that becomes a consistent income stream every month from that video, as long as that video stays performing.
I'd argue too, it's a reflection of how engaged and interactive your community is as well. Like affiliate sales come from people watching your videos and taking action. And community, I think, is a really big part of that. Like you have talked a great deal in this conversation about the power of the community that you have built and how they take action on the things that you do. I would think that that proven trust that you have built and the action of your community is reflected in those affiliate sales.
Oh, sure. I mean, we've been doing it since 2017. I've got people that are still watching, that have watched since 2017. So you do build up that know, like, trust metric that Google follows so closely, and you do notice that your affiliates do better as you build that sense of community.
For sure. Now, the other income stream that you have that is small, but I think the original thing that you were creating content from was that you have book sales.
Sure.
What is it that your books are about, and how are you incorporating them into your YouTube strategy?
Well, books, like I said, they were really the first online income source while I was still doing freelancing, still doing well with that. But obviously, the blogs weren't doing anything that first year. I think that the first year, let's say, here we go, the first 9 months of income from the online, the blogs, the books, everything, was $792 a month, right? And I'd say $400 of that, maybe an average $300-400 of that was from the books, right? So it was really the source that, and it was immediate. As soon as you hit publish on a self-published book on Amazon, you're starting to grow your income stream from that. So it was really the thing that got me started. Again, I haven't updated the books. I haven't done a new book in probably about 2.5, 3 years. So I can't say really how competitive it is on Amazon and how easy it is to do that today. But it was a lifesaver to get started. It's about $160,000 total from what ended up being about 12 books. I've sold the rights to 3 of them. So I just basically I took them off Amazon under my name, sold the rights to someone else to publish them, things like that. And again, I haven't done anything on them for 3+ years, and they're still doing $200-300 a month. So it can really show you the power of that longevity in those, especially if you're still promoting them and still publishing things like that. I mean, I was doing a couple thousand, 3, 4, 5,000 a month. A lot of times when I was actively publishing and actively promoting the books.
Yeah. Books are such an interesting, I have a book too, and it's a very interesting world to figure out, because it's like, how do I bridge this digital and physical world? And you also there's self-publishing, and then there's can I get my book into Barnes and Noble, and can it hit right? Is it going to connect in the same way? There's all these ebbs and flows and things to figure out within it to see how it can make sense. And it's just, at the end of the day, you wrote a book. That's such a fantastic accomplishment that so few people do. And even when you look at our world of being a YouTuber, so few people do this thing, and they've all know about it, and that it's a job and a thing that people do, and people will talk about it. It's just, incredible dedication to like your craft and your expertise, and to have a multimedia approach to what you create and how you share your expertise, especially when you get your community involved. Now, your last income stream that you have on here is digital courses and digital products. And you did mention earlier in our conversation about how it has a part of your business that you have, but you don't necessarily do as much with it. What is your current plan that you have going on for your digital products and courses, and what are you going to be doing with them going forward?
Well, part of that is I think maybe just kind of laziness or the routine that I like. I'll say that sounds better than laziness. I mean, I like just knowing that I have to do the 3 videos a week. I have to engage on social media with my community. I have to work on sponsored posts and affiliates, things like that. It's very much a scheduled process that I can depend on every week. So the courses kind of fall behind because obviously that's something that you have to do additional hours. You have to find the time to do courses. I'd like to do maybe a course every year, maybe a course every year and a half. It's not really about the money anymore. So I wish that would be kind of a motivator for me, because I mean it is really good money. Just this last year, it's 20% of the income, just because I did publish that new course. But that's not really the motivator that it used to be. So it's really hard to get myself out of that routine and that schedule that I like. But I think a new course every year and a half would be manageable.
Throughout our conversation, the thing I have found the most unique about how you talk about your YouTuber business is you very much approach it, I think, with the regiment and understanding of how someone who has a traditional small business does. You're like, I know what I have to do every week. I have to show up 3 times a week. I have to make these videos. I have to engage at these times. I have these regimented things that I have to do, which I have a lot of like a job connotation to them. Do you think, how does your approach to your YouTube business allow for you to be successful?
I think obviously the cliche is consistency, right? You have to be consistent. You have to commit to it. But cliche or not, it's true. You see channel after channel that just slogs along for years. Really doesn't get the views that they deserve a lot of times, and really isn't successful in terms that we might think about. But they stick with it, and eventually, they get that 1 or 2 videos that really do well. That starts that flywheel, that starts that momentum that really takes them off. And I think the ones like myself that are able to just grind it out. Sometimes it's a grind, but that's what you got to do. That's work. Okay, people. That's if you stick with it and you do that for whatever period of time that is, you will be successful. I think it's hard to put it's hard to put a lot of this into perspective or real think about it real. God, that sounds horrible grammatically. But here we are on YouTube. We're self-employed entrepreneurs, and we think hey, I can hit record on a video, do that maybe once or twice a week, and I'm good, right? It's so much easier than working. But then, and a lot of you'll find a lot of creators, a lot of influencers talk about burnout and how they're so tired and they work so hard, and you look at them, you're like, yeah, really though? I mean, do you work hard compared to the person that's waking up at 6 a.m. every morning and working working 8-10 hour shifts at a factory, or on their feet for 8 or 10 hours as a nurse or something like that, day in and day out, with really a set salary that even as hard as they're going to work, they're still only making that set salary. So it's you really need to put it into perspective, and once you get that perspective, I think it's much easier to say, hey, this is what I got to do this week. I got to do it every week. Doesn't matter if that last video I did, I was so super disappointed. I mean, I'm speaking from experience right now on this, and many times in the past. You put so much effort, so much time into a video. You think, oh, this is the good one, right? And then 10 of the last 10, it flops completely. it doesn't matter. You just gotta keep on that schedule. You got to pump out those videos. Sometimes quantity is a very real thing, and you just got to stick with it. And I think that helps. That the people that can do that, that can put it into perspective and say, "Hey, no, just work, put the work in," are the people that eventually will be successful. Whether you are now, whether you are next year, or even the next year, you will be successful.
I think that's fantastic advice for all of us to move forward with and end out our conversation. We will have all of the links to Joseph's information in our show notes at thefundedyoutuber.com. Joseph, thank you so much for everything that you have done to be on the show and that you've done to get you here. And thank you for doing a job with us. So grateful for your time and expertise. Until next week, everybody, go make the money. Peace. The Funded YouTuber is brought to you by Gigastar, a parent company of Gigastar Market, an SEC-registered funding portal and member of FINRA. Learn more at gigastar.io. Neither Gigastar nor its affiliated companies provide legal, regulatory, financial, or tax advice. Any opinions expressed herein are those of the authors and are the informational purposes only. The information and opinions expressed herein are subject to change without notice and do not take into account the particular investments, objectives, financial situation, or needs of any specific investors.